Good evening, all. We'll start shortly. All right, so let's get started with our weekly webinar week at Religare Technicals. So some of you know that how works, but for the ones who have joined us for the first time, so basically in this webinar we talk about markets, the performance during the week, and the top sectors, losers, top gainers and losers from the Nifty 50 basket, followed by our view on both Nifty and banking index and some of the stocks which should be on your radar for the next week. So let's get started with a quick disclaimer that it's not information to trade or invest. So please check with your financial advisor before you take any decision based on the information shared. Now talking about the index, so it's a week of we're gonna be the wherein both Nifty and Sensex managed to gain marginally higher after the sharp slide in the passing week, roughly around 2% kind of a cut that we had in the passing week. So it's a week of consolidation or a pause, you can say, that we saw this week. Importantly, the IT and FMCG, the sectors which were holding strong last week, were among the losers. In fact, IT slipped nearly 6%. At the same time, realty, auto, metal, energy, and media, they were the one which supported market, which supported recovery, and helped the index to end in the green. Among the top gainers from the Nifty 50 basket, as you can see that three names from the auto space, Bajaj Auto, Maruti, and Aisha Motor. And then we have Tata Steel and Ashok Apollo Hospital also in this list. Losing side, clear-cut underperformance from IT. Top four names in the losing list: Infosys, TCS, Wipro, HCL Tech, and one from the FMCG basket, that is Tata Consumer. So this is how the week panned out, completely opposite to what we had in the last week, wherein IT and FMCG was largely the sectors which were in positive and did in a strong noting, but they completely fizzled out. Now, okay, talking about the index first, Nifty. So how charts are aligned and what should be the area of concern for us in the coming week. Needless to say, it's a holiday shortened week, the coming week. So obviously, it's going to be a volatile one. And as you can see, Nifty on the daily graph, this is the daily graph of Nifty. And last week, we had this breakdown from this channel that, as you can see on the daily chart. We also slipped below this yellow line, which is the short-term moving averages. And that is why we were saying that, markets are set for a lower level. And accordingly, we also tested 11,700 mark, in the passing week. But in the last two sessions, we have seen a strong comeback thanks to upbeat global clues, especially the US markets. The US markets are trading at the record highs. So that is basically helping our index to witness some recovery. But are we out of woods now? So a couple of things, important observation that we have. In the last two sessions, we have made an attempt to cross this short-term moving averages of 20 EMA twice. Means in the last trading session, it tested that mark close to around 22,100 mark, but couldn't sustain, couldn't cross. Today we crossed that mark, but we couldn't sustain. So short-term moving average around 22,100. That will be the first area of resistance. Second would be the same area where we discussed last time, the 22,250. Once we cross that mark, then this negativity or consolidation bias would subside, and again we'll see market witnessing traction and inching towards the record high. As of now, indications are not in the favor. It's more likely that we might see some consolidation, and the sideways tone might continue. Obviously, the global clues are largely dictating the trend, especially the US market. So how the next session pans out, and accordingly we will see the reaction on Tuesday. But as of now, the indications are in the favor that this consolidation tone might continue. Downside, 21,850, this area which we marked the last time also. As the last week also we have breached that mark and tested 21,700. This time, in case if we're going to breach that mark, there's a possibility that this decline may extend and we can retest this lower band close to around 21,500. So we are completely not out of woods. So one should not outrightly go bullish, seeing the rebound in the last two trading session and seeing that the US markets are doing well. We still need to wait whether Nifty manages to cross 22,200, 250 area. Then we might subside the negative bias, and there could be a bit of a formation. As of now, there is no formation. As you can see, that charts gives you the signal beforehand. So there is no formation whatsoever that we are going to see any strong up move from the current levels. It's more likely that we might retest this trendline resistance again, which was earlier acting as a support. It might act as a resistance in case if Nifty makes an attempt of further recovery. So hope it's clear that though we are seeing a recovery, but it's not clear-cut trend. We need to wait and watch whether Nifty manages to hold above 22,200 or not. Downside, the bias would shift again on the negative side once we break 21,850 again. Meanwhile, stay stock specific, across sectors. There's not even a single sector wherein we are not seeing any stock participating in the move. Means despite the negativity, we have had a list of names from across sectors which were holding strong. So we should be focusing only on those names. Like, just to give you an example, that Maruti, Bajaj Auto from the auto space, they were the consistent performers. So despite the negativity that we had in the markets, they were holding strong, and now they are inching higher with last 2 days of rebound in the index. So we should be focusing stocks which are not participating in the negative mode. Means they go sideways, they take a pause, but they are the first one to cover when the market witnesses recovery. So hope it is clear. Next, banking. So banking, as last time we've discussed, that the kind of swings that we are seeing in banking is not normal, and this is continuing in this week also. Means this week also we penetrated this mark 46,100, which were eyeing as an immediate support, and but on the closing basis we could manage to hold this level, and it was more like a muted session in the last 2 days. Again, 47,200 is the zone where we are eyeing the immediate resistance. So only ICICI again is the only private bank where we are seeing consistency in the trend. If you remember that last time also discussed about this, that Axis and ICICI were the one among the private banking majors which were holding strong earlier, but last week it was the Axis which shifted its tone and turned sideways to negative. Now it's only ICICI. So with ICICI, it's going to be very difficult for Nifty to cross and manage above 47,200. So take a clue from SGFC, Kotak. If we have to make a decisive attempt. So these are the top 4 stocks which have the maximum weight in the banking index. So banking index has 12 stocks in total, and the top 4 has the maximum weight. So once we see any decisiveness in the private banking majors, then only we can say that yes, we are set for the next leg of the up move. So Nifty, though, anyway, is not giving any signal of a strong uptrend. But for banking also, we feel that the move could be positive, but it's going to be gradual, right? So as of now, ICICI is the only candidate where we are seeing consistency. Rest of the name, one needs to be selective. Okay, so next on the stock specific front, where we should focus. So the name that comes to our list is Aisha Motor. So we named Bajaj Auto, we named Maruti, Hero Motoco. Aisha is something that is, a gradual mover. So as you can see that the stocks spend considerable time, before the breakout, and uh, it's not a very strong directional move. Suppose that move, we had a phase of retracement also towards the neckline area of this pattern again, and again a recovery. Now we feel it's the consolidation, the next leg of the consolidation is over, and we are set for a newer highs. So maybe close to 40, 250, 4260 is something that it might test in the near future. So Aisha is one candidate, because the price action is with volumes that should be on your radar. Next, metal space is also holding strong, but not all these stocks are witnessing a similar kind of attraction, and they are volatile too. Means they are highly volatile. If you talk about stock like General Steel, JSW Steel, they are indeed good performers, but they are volatile, to trade. Hindalco is one name wherein we are seeing consistency in the trend. So as you can see, it's a clear channel that the stock has been trading in. So we have had occasions of multiple retest of the lower band of this channel, and we had similar test here also. And now again we are seeing the stock inching higher. So we are assuming the kind of fall that we had in Hindalco gradually is going to subside, and the stock is likely to retest 580 to 600 in the coming weeks. So this is one such stock which is less volatile within the metal space and looks comparatively better to us. Lastly on the list, Pidilite. So now we have started seeing stocks related to the chemical sectors, forming some bit of a consistency in the recovery trend. So Pidilite, after this phase of consolidation within the range of 2280 to this 2900, it has finally witnessed a breakout from that range with decent volumes, and we expect this consolidation, because it was a prolonged consolidation, it should gradually inch higher from the current levels. So it's a phase basically where one can look for accumulation Pidilite. So just to sum it up, for index, for Nifty, we are eyeing consolidation. Bias is still sideways to negative until we reclaim 22,200. But on the stock specific front, we are getting opportunities even on the positive side. So one should plan accordingly. But don't be aggressive, especially in the mid cap and small cap space. Be selective, means indexed majors or larger mid cap are the names which one should refer to. And when it comes to banking, though it's also holding strong, but since we don't have any trigger from the private banking major which could push the index higher, we are wait and watch mode in the banking index, with a bias comparatively better to what we have in the Nifty. Means we are not bearish in banking. 47,200 is what we are eyeing as a strong resistance area. Once we are going to cross that mark, again 48,000, 47,900, 48,000. Stock specific, three names: Aisha, Hindalco, and Pidilite, which we feel has potential to do well in the coming weeks, and which one can look for accumulation. So this is all from the presentation part now. And there's a quick feedback. So please fill in your feedbacks. And once you are done with this feedback, you can start posting your question using that Q&A tab. Please quickly fill this feedback and then you can start posting your question using that Q&A tab. All right, so let's get started with the list of questions that we have. And again, I'll request not to uh, put forward any stock specific questions, any related to any particular sector. Definitely we can answer, which we have missed during the presentation. If you want to talk about any sector, global markets, we are open to comment. And in case if you have any stock specific queries and you are associated with us, you can definitely send your queries to your respective branches, to your business partners, and they can forward those queries to us. Respond. All right, so let's get started with Q&A now. All right, so Mr. Benjamin has first question that stock in the IT sectors are oversold in March series. So can we go long in the April series? So see, I feel that one should wait and see, whether we manage to hold these levels or not. Because yes, the retracement seems like over, but we need to have a sign of recovery or at least some base formation, because the recent decline was swift in the IT pack, and it is reverse to what we were seeing in the US market. So that's why I feel that if your plan is for the short term, means for the April series, especially if you are planning any futures trade, then definitely one should wait. If you are planning to accumulate the IT stocks in cash, then definitely you can go ahead and start accumulating the top names like HCL, TCS, and Infosys. Okay. So again, stock specific query, Vibhu, we cannot comment. I hope you understand. Again, like so many stock specific queries. So, okay, we'll answer a couple of these queries just in case, to address the concern of the larger audience that one stock which was in Fancy, we have question from Neha on Tata Tech. When will the Tata Tech rise? So yes, the stock, opened very strongly on the IPO. But since then, we are seeing gradual drift. So we need to put a line somewhere that when we, are likely to exit, even if something is extraordinarily, publicized as a very strong candidate. So even the good stocks can correct 70-80% that I've shared in my previous webinar. If you can go back and check our recording on Religare online channels, social channels, you'll find it on the YouTube channel specifically. That even the best stocks correct, once their move is over to 70-80% from the record highs. So, and that is what we are seeing in Tata Tech. So there's no sign of recovery yet. So if you have anything like for the short term, it's time that you should decide on exiting that name and shifting to some other counter. Okay, next we have Mr. Ashish on textile sector. So textile, it's kind of a mixed trend that we are seeing within the textile space, and though mostly are still struggling, means mostly are still trading down, and there is no sign of recovery in majority of the names. But let me just check KPR Mills, how KPR Mills is. So KPR Mills looks, comparatively better to what we are seeing in the other stock within the textile space. So in case if you're planning anything to accumulate, KPR Mill could be one candidate which you can look at. Okay. Any particular sectors to refer? So no, I would rather suggest you to maintain stock specific approach in the coming week, because as I've said that within the sectors, even the sectors are underperforming, but we have a couple of names which are doing well. So sector specific approach is not going to work, at least in the near future. And apart from the domestic clues, also keep a close eye on what the US markets are doing. Although we all do, but now it's very important because we are seeing diverse trend. Means the Nifty is struggling, uh, and drifting lower, but the US markets are at the record highs. In case if we see any correction in the US market, that might dent the sentiment at domestic front too and result in further correction. So next question we have on the defense space. So defense space, they're largely doing well. If we exclude the recent occasion of a sharp cut in some of these names, it was across the board. Basically, we saw the selling, and now we are again seeing recovery in stock like HAL, BEL, BDL, BHEL. I would rather suggest if you have a short-term view, then you will continue to find volatility across the board, including the defensives. So defensives are, stock related to the defense sector. They are not the one which are going to see substantial up move from the current levels, because majority of the positives are already discounted. So if you are a long-term investor, then you should continue to hold your longs. Otherwise, you may look to utilize this opportunity of recovery to exit those longs if it's a short-term trade. Okay, next we have Mr. Deepak on power and auto space. So power and auto is trading mixed, but auto looks comparatively better to me because if you see that stock like Maruti, Aisha, Bajaj Auto, Hero Motoco, in fact, Tata Motor is also seeing recovery. So majority of the name from the auto space, they are doing well. So definitely auto should be on your radar. And at the same time, power, I feel again when one needs to be selective because we are seeing recovery in some of these names, but they are closer to their resistance zone, especially the OMCs. So I would recommend preferring auto in comparison to the power space for a time being now. Okay, we have a question from Lavanya, which is related to the app, that how we need to explore this. So can you please share this with the VCare team, and they'll align you a person who can just answer your query, or you can share your number over DM, and we'll align somebody from the team who can help you to navigate the app, especially about the details that you are looking at. Okay, so yes, this is something that we have answered. And IT question again, which we have already taken. Okay, so majority of questions we have answered, I guess. Yes, some of these stock specific names that I always request to please share separately if you are associated with us. And yeah, so with this, thank you everyone for joining in. And next week is going to be a week of monthly expiry. So the rollover report, my colleague is going to take session on that. So I'm sure you will all connect and understand how the derivative rollovers have panned out and what we are going to see on the derivative front in the next expiry. And we'll also share a short video in case if you are looking, some of you might be looking for a summary in Hindi. Then on our social channels like Instagram, you can check our Religare broking channel handle. And also on the YouTube, we'll upload a Hindi summary of the session that we have just did today. Thank you everyone for participating and wish you all a very happy Holi. Thank you.